Welcome back. Let's talk to Alessio Rastani, founder and CEO of leadingtrader.com. Morning to you, Alessio.
Thanks very much for having me.
Right, let's talk S&P 500. We've got a slide on the...
Sure.
What's going on? It's going up forever.
Absolutely. Before I go into the Elliott waves and all that kind of stuff, I would say this. I mean, this is by far being a very harsh market for short sellers. I mean, short sellers have been getting slaughtered right, left, and center. And certainly this month, Nick, I'm sure you'll agree, has been a tremendously out of character month. I mean, September was
historically a bad month.
Absolutely. And I would say I've probably been wrong on this one too. I expected September to be a pretty volatile and very negative month, and it hasn't been like that. But still, there is a few more days left, a week more left to the end of September. We don't know what might happen yet. But bottom line is this. Look, we're above 2480. The key level to watch is 2480. Why that level? Because that's the previous close on the market, the highs that we took out, which was back in July, August. Okay. As long as we're above 2480, the path of least resistance, Nick, is to the upside.
Yep.
So as long as we're maintaining above that, which is also at the 21 moving average, that blue line, we might actually test this level. I think very likely we'll come back, retest support at 2480, and I expect the market to hold that level and bounce from that. And we could actually, folks may use that as an opportunity to get back in, to get long, because here's the thing, Nick, if we maintain 2480, if we're still above that, and certainly if we can go above 2520 or 2510, the next target, quite astonishingly, will be 2550. So this is the thing, this market is not good for short sellers. Stay with the course, stay with the market. You're going to say something, Nick?
Don't fight the tape.
Absolutely, don't fight the tape. Here's the thing, though. But if the market closes below 2480, then yes, there's a strong potential. We could go back down to the 55 EMA, which is right now 2461. But I don't expect that. I think that 2480 will be a very strong level to break. Let's see how it does.
The key technical thing is old resistance, new support at 2480, right?
That's
right. So
right.
that's the textbook stuff.
That's right.
Let's go into the second slide.
Yes.
The dollar index. What's going on with the dollar?
Okay, so here's the thing. The dollar index holding the right. Actually, I want everyone to focus on our right-hand chart, which is the monthly chart. So now we're looking at the dollar index, the US dollar, going back from 2013. And according to the Elliott wave count, and as we can see here, very likely what we've been doing so far since the beginning of, I think since the last few months now, that major drop in the US dollar appears to have been a wave 4 correction. So that entire crash move we've had appears to be a wave 4 move down to the 50 simple moving average on the monthly chart. Okay, now we're holding that level. Let's see how that level holds for now, which is right now 92 by the looks of it.
Yeah.
And by the way, that level is also coinciding with the previous lows that the dollar
so
from
really
2016.
key support level.
Key support level, yeah. Let's see how we can maintain that level. And I actually, by the way, the RSI is oversold. That's a very important level. It's
a secondary indicator to price.
Absolutely. So we've got oversold levels on the dollar at support. And it appears from the daily chart, if we just go to the daily chart now on the left, so we can see that we got positive divergence, that's a bullish sign. Very strong move on the dollar yesterday we saw, and I would say that's an impulse move yesterday on the dollar, given the FOMC announcement that the Federal Reserve, they're planning to increase, from what I gathered, they said that they're targeting the 2% to 2.25% interest rates by 2018. So that's certainly boosted the dollar, and we can see that potentially we're forming a 1, 2, 3 third wave. This could be the third wave on the dollar on the daily chart, given the positive divergence. Here's the thing. I'm not extremely confident just yet that the dollar is going to rally. If we get above, I would say 93, if we can get close above 93, I feel more confident that this is potentially a reversal and potentially a third wave higher on the dollar. And that would mean we're potentially starting wave 5, that wave 5 that we just saw on the dollar. So that's what I got. I think that certainly looks very interesting for this particular market.
Risk reward quite reasonable there, I would think.
Yes, it is. And of course, dollar going up spells bad news for the euro, spells bad news potentially for even gold and silver, but we'll see how that goes.
Alessio, thank you very much indeed.